Hey, what's up, guys? This is Twisted here from 𝗠𝗔𝗥𝗞𝗘𝗧, and I'll be running through some market updates. Initially, first on Bitcoin. Let's have a look on the weekly time frame. Generally, I use ICT and SMC concepts, so we'll be working with order blocks and premium discount zones and so on and so forth. So looking at the weekly time frame, we have actually retraced down for last 4 weeks, and we are about 3 days away from closing the weekly candle. And looking at important swing points on BTC, first thing I see is this high that was made back in March, and then this low that was made back in November. So these are the two swing points that I have in mind, but that's too far away. 48,200 is a bit too far away, and we have been constantly pushing up since January, and we have taken out an important swing high up here, and we have a temporary high which has not been taken out just around here. So this will be the weekly swing point, or you call it breaker structure in SMC. And moving forward from there, we have a fair value gap on the weekly time frame that you have in the March 13th of March weekly candle. And we have just poked our head into it, and then we retraced back up, snapped back up on the second week of May. And then the next week we came down, we didn't close the body, and now we are in the fair value gap. So generally with SMC concepts, we look at the mean threshold of fair value gaps, which is the inefficiency that we will eventually want to get mitigated, and then we can see price push up, or we can see a further push down and fill the candle body down to this order block, and then we can go further back up. So looking on the daily time frame, I'll just clean up the chart a little bit, and there we go. So on the daily time frame, we have a constant push down since we created that high, and we have been just trickling down. Based on order flow analysis, we see we have bearish order flow, but we are in an uptrend on the daily, so we are basically in a pullback phase. So when we use a 50% fib settings, we have not reached the 50% of the previous swing. So we can definitely come down, mitigate the 50% and fill inefficiency up, and then start making our way up. Or we can push further down into the discount and fill these two fair value gaps, start forming some structure, and then we can push back up. That's definitely on the table because we don't have any clear structure for the upside, but at the same time we are in a pullback phase, so we can definitely mitigate the midpoint and start traveling back up. So important order blocks to mark on the daily time frame will be this initial push down, so I will mark that bit out around here. So that will be a supply zone that I have in mind, which has been tapped once, twice, and we have seen considerable push down. This push down didn't take the order block, but then finally when we came back up, we didn't take the high, and we took the intermediate term low on the swing down here. So this was our internal breaker structure, so that will go up to internal breaker structure. There we go. And this is the false low at the moment, because the job of a low is to break the high, and this low has so we'll just mark that out as a false low for now. And so we may form structure and we push back up. Based on further analysis, we can see that even here we have relative equal highs, so or buy side liquidity. which will eventually be taken out, but depending on how strong the move is to the upside. We see on the push up, we only have smaller bullish candles, but for the down move, we have big bearish candle, so which tells us that the bears are in control. They want to push the price down, take it to fair value, or take it to discount before we start pushing back up. But anything can happen. We have different scenarios marked out on our chart. The second thing we will see is that this high from the previous swing that was formed, which was taken out by this low, we can mark this out as well, which is thicken that up. So this will eventually be targeted, and that's just right above the fair value for that premium swing. And when we look at the price, we see relative equal lows as well here, so that will be the inducement. So we are holding structure, but not at the moment in a way that we are convincingly going to go up from here. So that's one point where we have to be careful of, that this lows can definitely just be taken out easily, and then we start traveling back down, and then we push deeper into these zones. Marking out the fair value gaps on the discount side of things, that will be one fair value gap, and that will be the second one on the discount. And I just realized for our premium discount, I have it the other way around. So red will be the premium, green will be the discount, so that's better. So we have this area in mind, so we just remove that from there, so we see the 50%. So this is something that we can mark as previous high. We just mark that as black, and so we have that as a reference point, and we'll also write the price on that, so just to keep things clean. There we go. So this was our fair value gap that we saw on the weekly. So this was the fair value gap on weekly time frame that we'll just do at the bottom, and just make it a bit more cleaner. There we go. And that will be the mean threshold for that fair value gap on the weekly time frame, which works into perfectly for the discount side of things for the daily swing up that was formed here, and then the price is pushing back down. Going further down into the 4-hourly time frame, let's have a look. What do we see here? I'm not overly bullish at the moment. I would like to see further downside and mitigation of these values, and we efficiently mitigate that in a way that after mitigation we will see some cleaner price action. Right now we are just in a sideways chop, range bound. So 4-hour, what do we see here? So that's the same thing we see even on 4-hour time frame. We see a push down from here, and we are just on the sideways channel. But when we mark our structure, this was the buy side liquidity that we marked on the daily, which was our relative drawn liquidity for relative equal highs. And when you zoom into the 4-hour, we see inducement here. So this will be the relative equal highs that will eventually be targeted. But at the moment, we do not see anything going towards that side. We mitigated that here, and then we see a push down. But then this low is holding. I'm not too sure how convincing that will be. But looking at internal structure, we saw this strong point being taken out around here, and then we are pushing back up. So we can easily push back down and then start making our way up before we mitigate in here, and then we see a further push down, take these lows out, tap into this, and then we see a further push up into these areas. So marking out important swing points and order blocks on the 4-hourly time frame, we'll say here, again, it's the other way around, there we go. So basically, the reason why I took this high was because this was the last push down, and then we broke internal structures around here, and this was a fractal break, and then we started forming structure here, and this was the low that has been respected in the 4-hourly time frame. So we would like this to be respected for a further extended period of time until it gets broken or invalidated later on. And I would like to add even the OTE zones on here. So you see 79.79 of the swing was mitigated. We had a minor body closure, but then we see two bullish candles up, so we can definitely come in here for this can become an order block, and then we can start filling up these inefficiencies on the 4-hourly time frame. So zooming further into this swing, let's work with this. At the moment, I will see this as eventual drawn liquidity on the 4-hourly time frame. This will be our relative equal highs that will get run. This will be the buy side liquidity eventually, or an invalidation point if we are going to the further downside, and marking out the fair value gaps on the premium. This is number one on the 4-hour swing, and this was number two, which wasn't completely that was completely filled. See to the wick, and then we came back down. So this was completely filled, but we will still leave this open because in ICT and in SMC teachings, we work with fair value gaps, because eventually what they do is that they become balanced price range, and price will like to use them as support. And once it breaks through, price will like to come back in and use them as support and further push up from there. Looking at this price action here, this can become our eventual order block. So this will be our order block range for the 4-hourly. Here, we'll just move this over here, and this will become our 4-hourly order block, and this will become eventually support if we are seeing bullish price action from here. Ideally, I would like to see this buy side being run, and I'd like to see strong bullish closure above like this, and we would I like to see price further push into this relative equal highs. That's when I'll see, okay, yeah, price is bullish now, and then I'll wait for a retracement back down for a further push up. So these are the main areas that I will mark out on the 4-hourly, and we'll just wait for structure. If you're going into a smaller time frame, then depends on your execution and what are your entry models that you'll be using for further entries to the long. But at the moment, we are on a decent point where we can take short-term longs. For example, we can look at this as a internal breaker structure that was strong. We had impulsive candle that closed below this, and then we had further push down, but we didn't take this low out, which means that this low can hold, and we can see bullish price action from here. And when we grade our swing for this side, for example, this was the high and this was the low, we can see this as the fair value. So you can use this area as an intermediate point for your longs, but I would definitely like to see some bullish price action in here. Fill this fair value, and then if we are going to push up, I'd like to see some further push up. Of course, we can come down, manipulate, and then we can tap into the order blocks around here, and then we can go up, or we can just start traveling up from here, finding 50% as the support. If that becomes a support, that's a big if. But dropping down into smaller time frame on the hourly, what do we see here? So we will need that. So using this last swing, which was broken down here, we have chop, but we don't have body closure. The first thing I would say is look at this. This was a sweep, but we don't have any body closures below this. So this area was swept. This was also a previous zone that was mitigated on the higher time frame. We came back up, we pushed down, we didn't close body, and then we are starting to form bullish price action or bullish order flow. This wick was mitigating this fair value gap, which is the 4-hourly fair value gap, which we can expect to become a balanced price range eventually. And this was the buy to sell area. Here on the hourly, we can see it with more clarity. So this will be our buy to sell around here, because what smart money did is like they brought the price down into here, around here, into discount. They bought back up and then they sold further down, liquidated a lot of initial longs that got in, and now we are forming bullish price action. And this is corrective price action. Mostly corrective price action leads to trendline liquidity that gets formed on this. For example, here is our trendline liquidity formed for the sell side, which eventually will get liquidated and when we go further back down. So these are the two scenarios that I would look at for BTC on the smaller time frame. You can do the same thing when you would like to mark out initial swings and order blocks in smaller time frames as well. So let's mark out the hourly. So that would be the last thing before we jump into some more charts for BTC that I've marked out on here. So looking at this price action, I'll remove this a little bit further back. This was our 4 hours, so we'll just leave it as a 4-hourly fair value gap so we don't lose track of that. And this was our 4-hour week, 4-hour fair value gap as well on the premium zone. So we'll just move that away from that for now. Okay. Internal breaker structure for the 4-hourly, which was a proper breaker structure for the hourly time frame. We pushed down, low was taken out as a sweep, and we have no body closures at the moment. And internal fractal break has happened, but at the moment I do not see any. I do not see any body closures up here. We see we are coming back up to the swing high. We have massive wicks, but we are snapping back down into the dealer's range. So I'd like to see bullish price action around here. I would like to see big candles up, closure above, mitigated the 50, and then we can form some more narrative based on the discount zone. So looking at the hourly zone here, right now for me this is just a fractal break. I would like to see a body break and closure above, and some more price action form, but this is the range that I can mark out initially around here for 1 hour, and this will be the initial start of that bullish order flow, because see, price pushed back up, came back down, mitigated this doji up to the 50%, I believe. Let's have a look. How deep did we come down? 1 and 2. Oh, we didn't even come down to the 50% of the doji. We were at 0.23, and we pushed up, came back down into this range and pushed further up. We had massive bullish price action, but then sellers stepped in, pushed the price down, but the lows are holding, which means that for the shorter time frame we have bullish order flow, and this wick can be our next drawn liquidity for the smaller time frame. So we'll just do that. It says 26,644 on an hourly, and then eventually the buy to sell wick that was in the premium, that will be our next zone. So we can take entries around here on the hourly time frame if you use that at 50%. So that will be around 26 to 70, and looking at here, and I'd like to see this low get respected, so we can have our stop losses below that, and we can aim at this. So that's 2.7. If you want to leave it open, that's for our rate. So that's not bad for a short-term trade until the week end. So that's something that I will have an eye on, and yeah, we'll wait for the price action to form, build up for a further push up. We are in a big zone, but at the same time I would like to see deeper prices, but of course, price won't just go up in one direction or come down in one direction. We are open to all sorts of price action to the upside, but I'm more bearish at the moment, but we will definitely see a push up on the small time frames. Going into a weekly time frame that I've marked out earlier for us. So this is something I was looking at earlier. This is the wick that we spoke about earlier on 13th of March 2023, and that was a considerable massive wick, and this is a fair value gap which consists of about 17.6% of the move. So I would at least like the price to come further down into the discount around 24,500, or at least up to around 25,380 before we start seeing some bullish price action, because we definitely do have drawn liquidity on the hour, on the weekly as well. We have filled up this fair value gap on the weekly completely, and just have a look around here. We see, and we are seeing bearish price action, but we had a massive close around here, and now we are coming back down on the pullback phase for further push up around 32,427, but that will be later around, I'm not sure when, but at the moment I'm just looking at this swing down and waiting for this area to be filled, either the swing point on top or the fair value gap, like this. And dropping back down into another time frame, that's an hourly time frame again as well. This is the analysis that we normally post on our Discord. Please do sign up and check out all the analysis. We have some awesome traders in there. We send out trades, and also we do weekly market updates and a lot more in there. It's a fun community. Come join us, say hi. So this was marked out on a detailed chart for BTC by me on the hourly time frame, and I had this area marked, and I had the 26K, which was tapped, swept properly, and this was something that was marked out around here when we were just in this phase. So I was expecting price to mitigate this highs, which was taken perfectly, and then we had a massive push down where I also had markings for sell side, main threshold for that order block, false low, which was taken out around here, and this 50%. So all our targets were hit. This was an absolutely amazing trade if you had an entry around here, and if you had your stop losses just respecting these highs, so you can just leave it up here a little bit, and if you left it open as a runner around here, there was an awesome trade of 8.6R, which was completely bonkers for just, I would say, how many days? So that's 2 days. That's insane. So come say hi into Discord. These are the type of analysis that we generally post. There is so much more in there to have a look at. But yeah, so that was my my weekly update for BTC, and I would hope to see further push up for mitigation, and then we may see further push down later on in the upcoming weeks. But yeah, so far that's what I'm seeing. So hope that was helpful, and hope you guys have a good weekend and stay safe. Talk soon. Bye.